This is a very important point when it comes to investment in bonds. That is the redemption structure. Redemption structure. What is redemption structure? Redemption structure is just an indicator of when you get back your money. I invested my 100,000 in bonds in 2024. When will I get it back? When will I get the 100,000 back? Because all that I will be getting through the years is interest. Now, when will I get my 100,000 back? Let me first introduce a term that I'm going to use here in this subtopic, redemption structure. And I'm not sure that I know the spelling of the term. So let me just confirm the spelling so that I don't say things that I cannot defend in a court of law. So this is the term, unencumbered. So the term is unencumbered. Let me explain what it is before I go ahead and use the term and get you confused. Now, if you have ever tried to apply for a loan, there are some loans or some institution where they will ask for you for security for the loan. So some of them will ask for a title deed if you are securing the loan using a land. They will ask for a logbook if you are using your car as a security. Others will use your household chattel. That is for some types of credit facilities. Now, you can use your investment in bond as a security for loan. So if you have invested in bonds and you want a loan, and you go to any bank for a loan facility, you can use your investment in bonds as part of the security. If they ask for security, you can tell them, I have invested some money in bonds, and I can use that as a security for the facility that I want. So the moment that you use your bond for a loan, it is said to be encumbered. So the moment you use your facility, your bond investment as a security for a loan, it is said to be encumbered. So when we are talking about the redemption structure, we'll specifically be discussing about we'll be discussing about amounts that have not been used as security for loans, and those are the amounts that we refer to as an encumbered amount. I repeat, if you use your bond investment as a security for loan in a bank or any other institution, the amount is said to be encumbered. So when we are talking about redemption structure, we are talking about amounts that are not encumbered, amounts that have not been used as security for loan. So if you have used your bond as a security for loan, you have to wait for the 8.5 years. You cannot redeem your bond. You cannot be given back your money when you have used that bond as a security for loan and the loan is still in force. Maybe you have not cleared the loan. So when I'm talking about redeeming back the funds, we are talking about those funds that have not been used as security for loans. Now, this bond, we have said that it was issued in 2024, and the time to maturity is 8 years. If you add the two, you will get that this should come somewhere to 2032.5. That is mid 2032. But not every investor will have to wait up to mid 2032 to get back their funds. And not all the funds will not be given back on a particular date in 2032. Bonds are redeemed in phases. Like the government of Kenya will pay a certain percentage this year, another percentage the other year, and then the quoted date, that is in 2032, they'll only be making final payments. So every bond will come with its own maturity redemption structure, and I will use the structure of this bond to explain what we mean by redemption structure. So this is the redemption structure of this particular bond that we are using as an example. The first payment will be made on 15th of February 2027, 20%. The other payment will be on the 11th of February 2030. That is 30%. The other one will be on the August. Now this is the final date, 2032. This is 100% of the amount. Now, if you invest, and I want to you to hear me clearly, so that you can be on the same page. So this is the redemption structure of this particular bond. Now, for any investor, we are still discussing redemption structure. So if you had invested an amount below, chaniache kutumia science, not all of us can remember that mathematics. If you had invested amounts below 1 million, if you had invested amounts below 1 million, the day that they start redeeming this bond, that is on the 15th of February 2027, you'll get 100% of your money. I hope it's clear. If you had invested an amount below 1 million, the day they start redeeming this bond, like for this particular bond is on the 15th of August 2027, you'll get back 100% of your money. So you'll get 100% at the first redemption date. First redemption date. So for this one, it is on the 15th of February 2027. So investors who had invested amount below 1 million, they'll get 100% of their money back. Meaning you have been given back your principal, and so you stop receiving interest. I hope it is clear. So for someone who had invested amounts below 1 million, they'll get all their money back in 2027, and so they'll stop receiving interest from 2027. So for them, the bond will not be for a period of 8.5 years, but rather it will be only for a period of 3 years. So for them, it will not be an 8 years bond, but it will be a 3 years bond. That is why I said that sometimes time to maturity will not always indicate the time that your money will be with the government based on the amount that you had invested. So for someone who invested less than 1 million in this bond, for them it is a 3-year bond, because they will get their money back in 2027, meaning they stop receiving interest. Now, this redemption structure is investors who had invested amount above 1 million. This is for investors who had invested amount above 1 million. So on the 15th of February 2027, they get a 20% of their money. On the 11th of February 2030, they get 30% of the remaining amount. And on the 9th of August 2032, they get 100% of their principal amount back. So this is an 8-year bond for individuals who had invested more than 1 million. And even for them, it is not the whole amount that they will get back after 8 years. They only get some percentage that will not be settled in 2027 and in 2030. I hope it's clear. And it is important to note the redemption structure of a bond so that to ensure that that your investment is in line with your financial goals. Because if you don't understand the redemption structure of a bond, you can invest in a bond that will not be in line with your financial goals. But maybe you have a son who is joining Form 1 in the next 2 years, and you have already set some money aside for that guy to go to school. So if you come and invest that money in this bond, and we have seen that you get your money back after 3, let's assume it is less than 1 million. Your son should be joining school in 2 years' time. Then you bring that money and invest in an investment that will give back the principal amount after 3 years. So here there will be a conflict between the investment that you are making and your financial goals. So it is very important to note the redemption structure of any bond.